Hello, I'm Carl DaCosta, property consultant at Williams Corporation, and I'd like to introduce you to Kathryn Marshall, who's our general manager. And we've got some questions today around insurance. Kathryn, we don't have a body corporate in place for our townhouse developments. So what do we do to take care of the risk?
We have a residence agreement that runs the fee simple townhouses once they're purchased by the owners.
And what does a residence agreement mean as opposed to a body corporate?
It's cheaper to run than a body corporate. It offers all of the benefits, if not more, and it has more flexibility than a body corporate.
Is there a risk of individual owners being able to opt out of insuring their property under this arrangement?
The residence agreement encourages a bulk purchase of insurance, which we have done in advance from Williams Corporation and obtained at about half the cost of a normal insurance policy. Unless 75% of the owners agree to insure via a different mechanism, they're locked in with the bulk policy.
Brilliant. And I guess because we're tendering out that process, we're getting extremely good insurance cover.
Yes, the insurance is really competitive because it's tendered out through several brokers, and the brokers actually go around all of the companies and all the insurance companies in the New Zealand marketplace and get the best insurance possible.
What are some of the downsides, if you like, if any, of being in a residents association as opposed to a body corporate situation, especially around insurance and maintenance issues?
There would only be a downside if you didn't have the residence agreement in place, because the residence agreement actually mitigates all of the downsides. If you tried to insure properties in your own right and carry out the maintenance of the external buildings and so on in your own right separately from your neighbours, that would be a real issue. The residence agreement covers all matters for the foreseeable future and the life of the house.
And that residents association, which is instructed by the residence agreement, is managed by a third party, isn't it?
Yep, the residents could actually choose to run it themselves if they so choose, but everyone has chosen a common management company. So far, the management company that runs our developments does that for all of our developments around New Zealand.
So the risks of some damage to a property, there's no way that an individual homeowner could find that their next door neighbour is not covered.
No, the management of the residence agreement makes sure there is a collective insurance in place. And also, even better than that, there's a sinking fund put there that actually has the money in advance to pay for the insurance for the next year's insurance as well. So it's quite a safe way to not only run the insurances, but also run the maintenance of the properties, future maintenance.
Body corporates are renownedly expensive. Often people will be sold into a body corporate type of situation, told at the time of purchase that it's X price, let's say $1,000 for the body corporate, but as time goes by, those body corporate fees keep escalating. What's to stop our residents association doing the same thing?
Our residents association costs of managing it currently are $150 plus GST per home. Basically, you're free to quote with any management company to run that, but what's to stop the costs getting out of hand is the fact that the residents could run it themselves. So they could choose to run it themselves or quote with even a small business accounting firm. The balance of the costs in the residents association are either actual costs for insurance or maintenance, or a sinking fund for future maintenance. So if ever the money was paid more than that $150 plus GST, it's just there for a future spend for the homeowner. So it's like a bank account that's their maintenance account.
It's also a fact, isn't it, Kathryn, that our homes are built very low maintenance, so they're very low cost to maintain. And there's minimal common areas that are covered by the sinking fund per se. So those costs are very likely to stay very low for the entire duration of an owner's interest in that property.
So far, the cost of the sinking fund that we've calculated per annum for the life of the building, when you add that onto the insurance cost, it actually comes in under the cost of what you would be billed if you went out and quoted your own insurance. So we went and quoted for a range of insurances, and our bulk insurance quote, the price per home plus the sinking fund, was still quite a lot less than the individual insurance policy cost.
So with Williams Corporation, we've done all the hard work for you. We've got the insurance cover in from day one. You don't have to worry about it. The costs are kept low. We've got minimal outgoings to maintain houses that have got low maintenance requirements. And we've got a structure in place that's safe, secure, and affordable. I hope this answers all your questions with regards to security, insurance, and the way that Williams Corporation tackles looking after the longevity of your investment.